right, everyone. Welcome to episode 10, I believe, of the overnight sessions. So today, these videos in general, my overnight sessions are basically for like the real ones that actually want to learn. And usually I react to videos, but today we're mostly just going to look at charts, fundamentals, and we're going to quickly talk about why I'm a little bit butthurt. I'm not going to lie. But like I said, usually these videos don't get a whole lot of views. Mostly it's just my like regular screen record videos on my Robinhood app. They get all the views, and those videos are a lot shorter, which makes sense. People want short form, I guess. Maybe I should start doing shorts, but usually these longer videos where I'm just like going over charts and financial metrics and reacting to stuff, it doesn't really get a whole lot of views. So it's mostly just the real ones that watch this. But you already know, got to go over the fit. We got the polo hat on. So I actually do have a Nike hat that matches this shirt, but I decided to go with the polo just because Nike has been a little bit disappointing lately. I'm not going to lie. No matter how much I tried to pump that stock, it's stuck at 60. I don't understand. But polo stock has been doing pretty good. And I kind of like this hat, even though this hat was like $70. I like the whole bear thing that they got going on right now at Polo. That's probably why the stock is up, just because of this hat. But anyways, let's get started. So why am I a little bit butthurt? So I don't know how many of you guys have X, but Robinhood lately has been retweeting, commenting on a whole bunch of people that bought Robinhood merch, even small accounts like this dude, the Chris Stocks with 3 S's. I don't know why people do that. Just pay the extra money to get your URL or your username. You know what I mean? Like, why do all this? But anyways, like Robinhood's been retweeting, commenting on all these like small accounts that spend like $20 on the merch store, whatever this is, $45. Or actually, he got a discount and it's free shipping. So he only paid $25 and he's getting 19K views. And I'm a little bit butthurt, I'm not gonna lie. I spent $435 on the Robinhood merch store, right? $435 on the Robinhood merch store. I make all these posts, all these videos about Robinhood. It's my number one position. It's my number one app that I show y'all. All this free advertising. I get it. I only have like 1,000 subs, whatever. But come on now. Like, what's going on, Robinhood? Am I like blacklisted or something? But anyways, yeah, I make all these videos. Hold on a second. Okay, my PC was glitching out for a second, but I make all these videos and all these posts, like showing what I think would be good for Robinhood's future. If we go to my profile right now, scroll down, I recently made a post about like what I would like to see from Robinhood. And this is basically like their net worth chart that they got going on. And basically what I'm saying is it's taking up too much real estate. They got to take what they have in the app right now, the main Robinhood app, which is like your chart of your net worth, bring that over to the Robinhood banking app, but keep the Robinhood banking design, because I kind of like that gold design that they got going on for the Robinhood banking. It kind of differentiates it, but yeah, use that real estate to put basically a Robinhood calendar. And basically with this calendar, you got all of your dividends, upcoming dividend paychecks. You have your earnings dates. You have all of, like if people choose to, they can put up like their bills. At first, a lot of people are going to be hesitant, obviously, because they don't want to import all of their accounts, kind of like their external accounts that they've got going on right now. I don't feel comfortable like inputting my SOFI into my Robinhood and whatnot. Even though I really like Robinhood's user interface, I just don't feel comfortable doing all that right now. But it would be really cool if we could just put like, hey, this is how much I spent on this bill. And it's usually on like every 3 months. For example, every 3 months I have a utility bill for my trash, right? It's like a quarterly bill instead of monthly. It would be really cool if I could just have that reoccurring on my Robinhood calendar so that I could budget accordingly. So the calendar is a dividend tracker. It's a budgeting tool. It's someone's like entire financial life in front of them. And that's basically what I was saying. OGs will know that I've been recommending this feature forever. Literally, everybody's been, most Robinhood users have been requesting a dividend tracker forever, but I've been specifically requesting a calendar because that would be so much more useful. And it's basically a dividend tracker too. But yeah, I mean, I also commented if your goal is to attract more long-term users instead of just emotional tourists, then you can have that be the startup page, right? An actual calendar at startup, or have the option for the OGs that want the classic view, have an option for that in the settings. But I do all this for Robinhood. It's my number one position. I buy all the merch. I spend so much money on them. I have a big investment in them. I try so hard to give recommendations like on X. I try to send stuff to the people that work at Robinhood, but I get no response. And I'm a little bit butthurt, I'm not gonna lie, but it is what it is. But anyways, we're gonna be looking at a whole bunch of charts. It's been a while since I looked at charts. I have been slacking. Earnings here is completely blank because I've been procrastinating, I'm not gonna lie. But anyways, we're gonna start off with MELI. I do have a small position in MELI in my secondary account. By the way, Pepsi dividends. I do have a small position in MELI. My goal is to get to 1 full MELI. I think it's in my IRA or something like that. But right here, as you guys can see, we did have a breakdown on earnings. We have this gap here, so we could see 1850 here shortly, just to fill the gap. We got this nice buy zone, big money buy zone. Looks like we have the, 200 weekly as support, big buy zone here. So, I mean, I'm seeing a lot of support, and if we just go back up to all-time highs, that's a 49% gain, right? If we come back up and break all-time highs. So, yeah, I mean, I like MELI. It's basically the fintech of South America along with Nubank. It's an e-commerce play. Some would call it like the Square or the Shopify of South America, and it's a fair comparison. But yeah, I mean, if we take a look at the financial metrics here, by the way, I did blow this up 200% because I know a lot of you guys were complaining last time about not being able to see it, but where is it? MELI right here. So this is the current updated price and I did not update these metrics, right? The only thing that has fluctuated since my last video is the price, obviously, because it updates automatically. But we do have a free cash flow yield of almost 10% now. So that is very attractive. When I was buying Robinhood, I'm not saying this is going to happen again, but when I was buying Robinhood, it was at a 10% free cash flow yield, $10 a share. Their revenue growth trend, double-digit revenue growth, which is very nice. Tangible book value is 119, so their balance sheet is positive. That's a good thing. Return on invested capital is roughly 10%. These are just rough estimates, and they are buying back stocks. So, I mean, MELI is just, it's a good way to diversify if you want some South American exposure. If you want foreign exposure, but you still want to stay within like that fintech realm, because that's kind of where I'm at. I like investing in fintech companies. If you haven't, already noticed, I have Robinhood, I have Nubank, I have SOFI, I have MELI, like I have Shopify. Like I'm like pretty heavily into fintech. The big loser for me was PayPal, but it is what it is. But yeah, I mean, this fits into like my theme that I got going on in my account, but it's also diversifying a little bit from America. And I did, right before all of the craziness in Mexico, I actually did take a trip to Mexico, and I did notice how useful MELI is to not just merchants, but also customers, right? It's a much better experience than just using cash, in my opinion. And MELI just makes that super easy for both the merchants and myself as a customer, right? As a tourist. So, I mean, I think MELI's pretty decent. It's definitely one I need to quickly build up, especially as we're down at like these support levels. Let's just take a look at the monthly, just because out of curiosity. So big, zone right here. the previous all-time high zone. Looks like we're coming back down just to retest. So yeah, it is one that I am looking into. Let's go to 3 months just out of curiosity. Yeah, it's not telling me much there. But let's go moving on to Reddit. So it looks like we got some consolidation going on here. It's coming back down to retest this breakout area. We got a big gap here. So big gap. Basically a 50% gain. If we come back up to test out that gap, we've got a bullish little momentum building here in my custom indicator. We got a signal. Keep in mind, it's not 100%. It's just something that I like to keep alongside my charting just to give me some perspective. But yeah, I mean, I like Reddit. I believe Reddit also has some insider buying, if I'm not mistaken. Let's look at some fundamentals. Just some rough estimates. So Reddit, low free cash flow yield, of course, but their revenue growth trend, very nice, right? It's roughly 60%. Tangible book value of 14, so their balance sheet's positive. Return on invested capital is double digit. That's good. They are diluting, but with how profitable they are, they're going to slow that down. I could see it, especially if insiders are starting to buy, right? Obviously, the insiders are not going to want to dilute themselves. Like if an insider is paying their own money to invest in a company stock, they don't want that to go down. Like they're not putting their own money into it because they think it's going to go down. They're putting their own money into it because they think it's going to go up, right? And if they didn't think so, they would put their own money into it because they get free stock compensation alongside it. So if they thought it was going to go down, they would just collect their free stock and dump it on the market. But Reddit has had some insider buying, so it's interesting. I like Reddit. I have half a share in my Roth IRA, I believe, just a half a share. I'm trying to build Reddit up alongside MELI, and I'm trying to do that quickly. But as you can see, there's a ton of stocks that I'm watching, a ton of stocks that I'm interested in, and I am. My Robinhood account is very concentrated, but I am slowly trying to diversify, just in case. And as my net worth grows, obviously I want that diversification, but I'm still going to be aggressively concentrated. But I guess I'm in that stage where my net worth is going up. This year it's gone down, but my net worth, like long-term wise, it has been in an uptrend, and I'm trying to diversify to a point where I'm a little bit more comfortable, like income wise, like dividend income, option premiums, my trading. I want to get to like a comfortable place, and then everything after that amount is just going to be full aggressive investing, concentrated bets. And I'm trying to get to like about a milli, right? Once I have like $1 million in one brokerage account that I can rely on for dividends, option premiums, whatnot, then I will transition. I will take all of the other money that I have, just dump it into trading accounts and just make concentrated bets. But yeah, that's kind of where I'm at right now. So I'm in like that weird in between phase where I'm trying to diversify a little bit. And but anyways, yeah, MELI and Reddit, I like both of them. Doesn't mean that they're gonna go up. I'm not a guru. I'm not your financial advisor, but I'm just keeping my eye on it. Ferrari has been beaten down. Ferrari has been one of the best stocks to own, but it came back down to retest the 21-month, 3-month. So this is major support here. The 50 monthly is major support. The 200 weekly, right? And we also have a little bit of momentum shift, possible momentum shift here. If it retags this zone, it'll be a 37% gain. So let's just shift that over. So Ferrari it's okay. I think for some reason Robinhood doesn't let you buy Ferrari stock. And it's been like that for many years. I don't understand that because Ferrari is somewhat of a popular retail stock. But yeah, Robinhood needs to get on that. I don't know if I track Ferrari. Yeah, I don't have Ferrari. And this, maybe I'll do it later. But yeah, Ferrari, I'm keeping my eye on. 34 PE, according to TradingView. So Chevron has been a very good. Oh man. So it looks like back in like January or something, whenever I made this. Wow, I really did predict this one. I just haven't put enough money into it. So whenever I did this, it seems like I was spot on. 14% gain along with a high dividend yield of 4%. Yeah, I guess I was spot on with this, but I just didn't put enough money into it. Gunning for all-time highs, and it did break all-time highs, you know, with all the global situation that we got going on. But yeah, unfortunately, I predicted it, but I didn't fully benefit from it. Look at this. Beautiful breakout, retest, coming back up, consolidation, building a wedge here, perfect wedge, breakout, uptrend, breaking all-time highs. This is textbook, like technical setup, technical analysis. It's just beautiful, man. Just breakout, retest, wedge pattern, consolidation, breakout, and then a breakout going into all-time highs. It's just perfect. But TPL, or actually, let's look at Chevron. Is this still interesting fundamentally? Did I pass it? I guess I don't track Chevron. TPL. So TPL is one of those stocks that has done very well, even though it's somewhat overvalued if you just look at it from a free cash flow yield. But they have an amazing business model. Revenue growth, perfect balance sheet, it's healthy. Return on invested capital super high, and they buy back stock. It's just a beautiful stock, honestly. Beautiful stock. It looks like a wedge pattern right here at all-time highs. Or actually, no, it's not all-time highs, but let's see. If you were to buy it just to break all-time highs, I mean, 12% gain to break all-time highs. Oh, man. Look at that consolidation. Big money buy, breakout, retest. And now it's just... I did buy a little bit in some separate accounts, but same as Chevron, I did not fully benefit from this big move. Levi's has been somewhat disappointing, but we got big buyers right here. We got this big accumulation that's going on here. But we've got... All right, let's delete all this crap. This nice consolidation going on here. It's above all the moving averages now. If it just tries to come back up, it'll be 30 to 50% if it tries to come back up. So this was one of my retail plays that I had. I don't think back when I had a whole bunch of retail stocks for the whole Sweeney short squeeze that they had going on. Looks like some gaps right here, just very tiny gaps. Yeah, very tiny gaps at 22. Circle, man. I hope a lot of y'all made money on Circle when I talked about it right before earnings. I made a little bit of money off of it, but I did not fully benefit. And as you can see on Circle, it is no longer at it's no longer at the free cash flow yield that I like. But before earnings, when I was talking about Circle, it was actually a 5% plus free cash flow yield. So, and recently the stock has been going crazy. So free cash flow yield is going to go down, but their growth is insane. Healthy balance sheet, an okay return on capital, 6% roughly. It's just an estimate. And they have been diluting, but I think that I think sometime in the near future, Circle is going to start buying back stock, just because, I mean, look at this. They're a profitable company, and they've already had the crash. So, this is like that stage where they should start buying back stock. So I think the dilution is going to slow down. Adobe, man. Similar to PayPal, it's just been sad, honestly. But 200 monthly, acting as support here. And if we look at, fundamentally, it's pretty green. Nice free cash flow yield, 7%. People are happy to get 7% in real estate, right? But you're getting that with Adobe. Not directly, obviously, but revenue growth is still double digits. Their balance sheet is iffy. But Adobe is a profitable company with an iffy balance sheet. So, but double-digit return on invested capital, very healthy, and they buy back stock. So, hopefully, with their profitability, they're able to make some decent investments. I'm pretty sure they just acquired a company. I'm not sure. I'm pretty sure they did acquire a company recently. But hopefully, with their profitability and their cash flow, they're able to juice up that balance sheet just a little bit. Just get to break even, right? But yeah, Adobe is pretty green. But yeah, 200 monthly on technicals. It's looking pretty rough. Lots of sell zones here. But if we start turning around, it'll be 100% gain. 100% gain would be roughly here. Back up to the 200 weekly, it would just be a 71% gain. So, the issue with Adobe, though, is it's kind of becoming a boomer company, just a little bit. But fundamentally, they're still good. And what I mean by that is I actually tried out the Adobe subscription thing. And obviously for like professional artists that are used to Adobe, they probably don't have as many issues with it. But I think Adobe is just there's too much going on. Like when I signed up for the subscription, I thought I was going to get Photoshop, but somehow I didn't get Photoshop. And I think the subscription that they have in the iOS App Store is separate, so it doesn't like transfer over, or maybe it does, but that's my point. Like, it's just too confusing. So if they just streamline everything, give you like all the necessities, right? All the base products like Photoshop, whatever, Acrobat, I think that's what the PDF thing is. So they give you all the basics for one subscription. Maybe that is what they do, and I'm just having a hard time understanding, but I don't know. That's just my point of view. They're just kind of a boomer company. Do I not have Unum? Okay, I have it over here. So Unum, 5% free cash flow yield, not bad. Revenue is a little iffy there, but good balance sheet, okay. 5% return on capital is like break even, right? If they borrow money at 5% and then make 5%, they're basically breaking even. But they are buying back stock. Let's see. So technically, it looks like they're consolidating underneath a resistance. So it's not the best place to be, but they do have a big buyer right here at 70. So somebody really likes this stock at 70. Yeah, this is basically like a boring dividend play, right? 2.5%. It's an insurance company. It's one of the many that I'm looking at. I'm also looking at Chubb, Lemonade, right? Those types. KMI was one I was looking at before this whole global situation. But yeah, if you think it's going to go back up to all-time highs, I guess you'll make another 30%, but it's also a 3.5% dividend now. I remember when this was, let me just go ahead and delete all this. I remember when this was like a 10% yielding dividend stock. I should have never sold it. I did have a big position in this a long time ago, back when they were consolidating here. paying a really nice dividend, but unfortunately, I just always sell. I also used to have Lockheed Martin, by the way, but I did sell that as well. I'm just a bag holder. What can I say? I'm paper hands. But we have Eastman. It's like a material industrial. It's a chemical company, but very interesting technicals that they've got going on here. So they got a big buyer right here below 60, and then they have this consolidation at 63. Breakout, another nice consolidation here at 68. Nice breakout to 80, and now they're retesting this zone right here, and it's above the 200. So lots of big buyers are here stepping in. Consolidation at the 200. Very nice breakout, coming back down to retest. So it is one that I am looking at. I will probably remove KMI just for now. Actually, I didn't want to delete it completely. I just wanted it off of my top list here. Yeah, so I am eyeing this one as well. Let me bring this one down. I really wish this was not super messy. Yeah, but Eastman, it's coming back down to retest, so it might be an interesting time for me to step in. Slightly oversold, getting to that point. So let's look at the 4 hourly. It's 4 hourly, even more oversold. Big buyer stepping in here at 69. So almost a 5% dividend yield. And if we look at the fundamentals here, what they got going on. So almost a 6% free cash flow yield, but their issue is growth. They have a healthy balance sheet, but growth and profitability. You know, it's a boring boomer chemical stock, right? You know, they make necessities, and I don't know. I honestly don't even know what they all make. Let's just read this real quick. I forgot. I used to know. So it just says they basically make chemicals for basically every industry. They make, what is it, some filtration stuff for cigarettes. That's interesting. Cigarette filters. Yeah, so I mean, they basically make chemicals for various industries, right? So it's just a boring stock. Their issue is revenue growth and profitability, but other than that, very high free cash flow, good balance sheet, and they buy back stocks. So just one that I'm looking at to diversify. But now we have MLI coming up, probably gonna fill this gap right here. So 17%, nice momentum shift, possible momentum shift here. They pay a low dividend of 1%, but it has come down a lot. Look at that, amazing performance. But they basically make they make wires, they make pipe stuff, like aluminum and copper products, just like necessities, right? I mean, I can pull up their summary, but piping systems, metals, like copper, brass, aluminum, and plastic products. And they also do business all over the world, right up in the Great Lakes. They do business in Asia. They do business in Europe. They do business in the Middle East. What is this? Industrial metal segment includes brass rod, impacts, and micro gauge. I don't even know what half the stuff is. They make refrigeration products. So very diversified. They make they just make stuff. I don't know. That's it. I don't know how else to describe it. They make stuff and it's boring, and they just print money is really all there is to it. But 5% free cash flow yield. Their issue is revenue growth. But tangible book value, healthy, double-digit return on capital, and they buy back stock. So their only issue is revenue growth, but maybe a part of that. I don't like to blame stuff on the economy because good companies will do good stuff no matter what a stage we're in, right? But I mean, if you take a look at global tensions, right, at the real estate market, there's probably less real estate activity going on. There's probably less global business going on. So if people are building less, doing less business, they probably don't need as many piping systems, refrigeration products, just, like copper, brass, aluminum items. So that is probably contributing to their revenue, but they are staying healthy even with the slow revenue. So just one way for me to diversify. What can I say? Now we're getting into some software. So software has been beaten down a lot this year. And I know a lot of people like to focus on what the hot thing is right now, which is energy, even though I want to say like 12 months, 9 months ago, I was talking about energy when I was mentioning my personal investment, REPX. It's a small cap. So it is very risky because it's a small cap and it's an oil exploration company. But stupid high free cash flow yield, even with the 25% gains that it's had this year, right? But 15% free cash flow yield, insane. Their revenue is a little iffy, obviously. It's just a boring oil company. But healthy balance sheet and healthy return on capital. They keep diluting shareholders, but this year they did step in to buy back stock. So we do have some of that, but basically their issue is revenue, right? Revenue growth and diversification along with dilution, all right? If they can just take their cash flow, buy back some stock, and just diversify the business a little bit, I mean, they're golden. But yeah, very risky play for me, very concentrated. Obviously, the safe bet would be to just buy an energy ETF where you get a little bit of everything and you get a steady dividend. But I'm just a little bit crazy. And we'll take a look at REPX on the charts just a little bit from now. How much time has gone by? 30 minutes. Okay. So 30 minutes and I haven't even gotten through big tech. So if any of you guys are still watching, like, you guys are the real OGs. But Zoom, good things that I'm seeing here. First of all, very good things that I'm seeing here fundamentally. They have a 7.7% free cash flow yield. Revenue growth has been a little bit stagnant, just a little bit. But I think, so they're doing, okay, what's going on here? They're doing everything right, mostly. They have a very high free cash flow yield. So their stock price is set up pretty well. They have a really healthy balance sheet, right? If they just double their balance sheet, they're basically at book value. They invest somewhat pretty decently with double-digit return on invested capital, 10%, and they're buying back stock. So the only thing that Zoom really needs to do, and I haven't had a deep dive into Zoom yet, so maybe they already have done this, but just similar to Adobe, make some investments, right? Diversify, make acquisitions, so people just don't think of you as Zoom the app, right? As just one, a company that only does one thing, right? So if you can, I don't know, maybe it'd be better if somebody just bought Zoom and added that as like a part of their umbrella of products. But yeah, I mean, if Zoom can just make an acquisition, I don't know, then their revenue would be double digits again. Then Zoom is golden, honestly, because they're already trading at a good valuation. They have a high return on capital. They buy back stock, healthy balance sheet. If they can just make an acquisition to get revenue growth into double digits, it'll be all-time highs. So, and you can already see what the moving average is crossing over, right? This is a really good setup that I'm seeing here. Let me get rid of all this. So, I mean, it broke above the 200 weekly finally. It came back down to retest, so it might be an interesting time to scoop up some Zoom, especially with software being down. It did break the 200 daily though, but I mean, it'll fill the gap back up to 84. But yeah, I mean, Zoom is not, I'm not gonna bet everything I have on Zoom, but it looks good fundamentally. It looks good technically here with the moving averages crossing over. You know, maybe a little bit into Zoom is not gonna hurt for me. But we also have CRM. It's probably the most talked about software stock right now with this bear market. How much did it crash? So over 50% crash for CRM. It's below the 200 weekly, but if it comes back up, it'll be 235 in no time. I did step in and I put 20 bucks into it in my Roth IRA, but yeah, it looks like 230 in the short term for CRM. As you can see, there was like a shift in momentum here with a crossover in my indicator. So if you were scooping up shares here at 180, I mean, you're looking pretty good right now. So sometimes my indicator works, sometimes. But if we take a look at CRM, I mean, this stock is all green. 6.5% free cash flow yield, 10% revenue, healthy balance sheet, decent return on capital, and they're buying back stock. So not a whole lot more to ask for. Honestly, I don't know exactly what all CRM does. I've seen some videos on it here and there. Cloud-based, digital commerce, automation. Maybe CRM should buy out Zoom. I don't know. What's their market cap? Just add another software company under their umbrella. I'm just assuming that CRM is larger than Zoom. Okay, I did not want this. I really did not want this. I don't like that. Okay, whatever their market cap is. 186 billion, 22 billion. So they could buy out Zoom. We also have ServiceNow. Broke to 200 weekly. That's kind of ugly. How much did it crash here? Over 50%, similar to CRM. If it comes back up to retest to 200 weekly, it's just another $20 gain. So a little bit messier than CRM, but it does have a nice gap up here at 170. 37% gain if it comes to fill up the gap. So ServiceNow is on my list, but as you all know, I have been looking into IGV. So IGV also has that gap right there. Bring this up here. So yeah, perfect, beautiful bounce off of the 200 weekly. It looks like it wants 97. So I mean, IGV is just, it's a basket of software stocks, right? It's just very diversified. So I'm also looking into that as well. Berkshire Hathaway, nice consolidation here. Berkshire Hathaway. Oh, but by the way, ServiceNow has come up a little bit. So now the free cash flow yield is a little bit lower, but their growth is very nice. Profitability, balance sheet, they're just diluting a little bit, but pretty sure they're going to start buying back stock. But nice consolidation here for Berkshire Hathaway. Looks like they want all-time highs, and they're probably going to get it because Berkshire Hathaway has a lot of cash. I imagine they would be like a safe haven, right? A safe haven stock. So like instead of people putting money into treasuries, they might put it into Berkshire. I don't know. I'm just guessing. But lots of consolidation here. Oh yeah, this is just nothing but chop. But 10% move would break all-time highs. So it is on my list. Apple. Lots of buying. Let me get rid of this. So, I mean, Apple hasn't crashed as much as some other stocks like Amazon. But, you know, it's just one of those companies that are just kind of, they're there. But if you take a look at big tech, basically the same story all around, except for a few outliers here. We have Meta. Hold on a second. We have Meta, low free cash flow yield, but revenue growth is nice, return on capital is nice, buying back stock, same as Apple, 3% free cash flow yield, but they have good or high single digit revenue growth. Still got a healthy balance sheet, but that return on capital is high, and they're buying back stock. The same story for Microsoft, Nvidia. The only outlier here is AMD and Tesla. But Google, same story. The only thing that's low is the return on capital. Amazon, same thing. Visa, same story. But yeah, I mean, big tech, especially Microsoft, because Microsoft is a big player in IGV. Microsoft is a big holding in IGV, I believe. So it has crashed quite a bit. 30% crash for Microsoft. Yeah, look at that big money buyer stepping in at the 200 weekly. Definitely, at least to 470. At least 470, I could see. Yeah, to fill the gap to 477. So, yeah, it's on my list. It is on my list. Let me just put a reminder. Sometimes I put reminders or give myself reminders to buy stock because I'm just like you guys know I'm a procrastinator. So I gave myself a reminder to possibly step in on MLI. I'm going to set a reminder to possibly step in on Microsoft, but that's the issue. Like, there's so many to look at. There's so many to step in because we got Microsoft, but we also have, like I said, Zoom, CRM, ServiceNow. But I also showed you guys the gap on MLI, so you could diversify a little bit away from software. So many. Reddit, MELI, even Ferrari is nice. Oh, man. Yeah, there's just too much. There's too much to buy. This is why I kind of want to I just want to be rich, you know what I mean? So I could just buy stuff. But I guess, if you're rich, it wouldn't really matter as much. But I love doing this. Even if I was rich, I would still be doing this because it's just interesting to me. But we got a big buyer here at the 50 weekly for NVIDIA, 200 daily moving average. NVIDIA, I'm not so sure about. They're a big tech, right? They're a big boy now. And it fits along with the other big techs. But I think Microsoft is just super attractive right now. It's just hard to find something that's more attractive than Microsoft, in my opinion. Maybe Amazon. Maybe Amazon, just because of this gap right here. Let me get rid of all this. Get rid of all this junk. So 232 for Amazon, but like I said, it's hard to beat this gap here on Microsoft. Like, you don't get too many opportunities in big techs, Let me look at, I've had my big play here because, and you guys that have watched my videos for a while now, you'll remember right before earnings, I did make a small bet on Meta, and I was able to sell here near the top, and I kept my profits, I believe. Yeah, I kept my profits in the stock, so it is back down to slightly below my buying price, but it's pure profit, right? And I might take another swing at it. So Meta and Microsoft, they're just the two, right? But I also don't really have a whole lot of any other big tech. So they're just, and big tech as a whole has just been beaten down alongside IGV, right? So it's just hard, man. There's too much. There's too much to buy. But I mean, we got one big dog, one big tech that wants to just rip because of individual company news, right? Netflix made an acquisition in Ben Affleck's AI company, and they turned down the offer for, was it Warner Bros? So they're gonna be making, or they already made a very nice check off of Paramount. Paramount had to send them like 2.7 billion or something like that. And they basically turned around and used that money to buy Ben Affleck's AI company. So, I mean, that's free money. That's basically what I'm doing in my second account. You're just paying, or you're just selling stock at your principal, pulling your principal out, just playing with your profit. And that's what Netflix is doing. They're playing with profit. But yeah, I mean, 120 for Netflix is realistic, but they also have this gap down here. So keep in mind, they could come back down to 86 if the market takes a hit. Visa has a gap at 350. Visa is another big tech stock that I'm looking at. Let's see. So Shopify is just cooling off. It's just a correction to consolidate a little bit. We had that shift in momentum indicator here. So we could possibly see a big move here to 160. I might have to scoop in some more, man, but there's too many to buy, man. Shopify is just, what is, Control F. Where is Shopify? So very low free cash flow yield, similar situation to other big techs, but revenue growth is insane. Balance sheet's healthy. Return on capital is nice, but they are diluting. But like I said, you know, profitable company. They're probably going to slow down dilution here. But look at American Express, above a 7.5 free cash flow yield, 35% revenue growth, roughly. Healthy balance sheet, 30% return on invested capital, estimated amount, and they buy back stock. So American Express is another big play for me currently. Take a look at Sony. Wow, Sony has been beaten down. What the heck has gone on? 30%. Sony is another big tech that I'm eyeing. You know, anytime you get these like big sell-offs in a big tech, right, a major corporation like Sony, I mean, down 50%, this was a steal deal. Yeah, anytime you get these big crashes in a big corporation that has been around, that is very dominant, like Sony, right? And if you want to diversify from America, right, Sony, I believe, is Japan. We got a big buyer that will possibly step in at 20. It's also the 200 weekly. But let me see. If we just come back up here, 42% return. If we come back to retest the 200 daily, it's just a 22.5% gain. Yeah, I mean, Sony's on the list. Sony is on the list. There's too much to buy, man. Nintendo has also taken a big hit. I mean, and Nintendo has entered a big buy zone here. 47% crash, but still basically 50% crash. This breakout zone right here, it's coming back down to retest. We got a big buyer that possibly will step in here in the 13 range. 200 weekly. Yeah, man, Nintendo is also attractive. It's a big company, right? A very well-known brand. It's a very unique gaming company. It has a moat, right? Because I think PlayStation and Xbox, they're very close competitors, but Nintendo has had a lot of success differentiating themselves. A lot of companies will try to be different, and it feels like they try too hard and it ends up not being successful. But Nintendo is one of those special companies that will do something different and it will succeed. It kind of reminds me of Apple, right? Because Apple has had, well, maybe not recently, but they've had a track record of doing different things and pushing the industry towards one direction successfully. And that's one of the, that's how you know you have a special company, when you can shift the industry's direction towards, basically changing the direction of an industry. Like Robinhood really pushed commission-free trading. Now it feels like every app wants to have a good user interface, just because of Robinhood, and a little bit of American Express. American Express has always had a good interface, but that's how you know you have a special company. So yeah, there's too much to buy, man. What else was I eyeing? Yeah. I already know big tech. I already know I'm going to keep an eye on it. But let's remove Levi's for the time being. Please just scroll down. Yeah. I've got a lot to buy. But where were we? Coreweave, another stock that a lot of people talk about. Insane crash. What is this? Coreweave, man, 60% crash for you guys. That is unfortunate. I don't know a lot about Coreweave. Well, what's the ticker? I said tickle. That's funny. Their stock price has definitely tickled some people. Coreweave, they are burning cash flow. According to Grok, right? So it might not be fully accurate. They are growing revenue, but still, they're burning cash to do it. They actually have a positive book value. That's interesting. So their balance sheet is positive, but it's probably because they've been issuing a lot of stock. Return on capital is negative. Yeah. Coreweave is an avoid. I might change my mind in the future if the business turns around. But yeah, Coreweave as of right now is an avoid. Rumble. I keep an eye on Rumble just to see if it will actually be a YouTube competitor, but it's been so many years, and Rumble, the few times that I use it, it's still kind of clunky. There are some good things that I like. I think they've been investing a little bit more into crypto. While I'm talking, let's pull up the. So they're making investments into crypto, making investments to improve their user interface. Of course, they have a subscription model, so a lot of advertisers, obviously, they want to avoid Rumble because YouTube is safer, right? YouTube is where like all the safe content creators go. Not going to get too risky, but in my opinion, lately, especially these last couple years, with the Trump presidency, YouTube has definitely relaxed on the censorship, in my opinion, just from my point of view. And they've been a little bit more lenient, letting you say just a couple curse words here and there. So they're trying to balance out the creators' experience, and creators' freedom, along with advertisers still wanting to spend money on the platform. So I think YouTube's doing a good job trying to balance out that beam. But Rumble, obviously, they are like all the way maxed out. They want you to say what you want, and advertisers aren't going to like that. But if you have a subscription-based model, and you also have a crypto business, then maybe that doesn't matter. So, but I'm not sure who runs Kick, but I think it would be interesting if Rumble and Kick kind of had like some type of merger. Maybe Rumble does own Kick. I don't know. I don't know anything about these websites, but there's so many new websites popping up left and right. It's honestly hard to keep track. But I've been keeping an eye on Rumble. Major crash. It's done nothing since IPO. I remember when IPO 2021. It's done nothing. But let's look at Grok. Free cash flow per share. A little bit of a cash burn still. So they're still burning cash, but it's a little bit now. Balance sheet is actually positive. Okay, that's interesting. That's good. Return on capital still negative? Just out of curiosity, because I know, let's not screw this up, please. Okay. Just because I know Grok messes up sometimes, I just want to get a good overview. It's 2021. Okay, consistent growth in Rumble. I like that. Let's go to quarterly. Tangible book value per share. Okay, it's positive. So they are maintaining a healthy balance sheet. That is good. Cash flow. Let's go to annual. So they are still burning money. Yeah. But they're growing revenue. So that's good. Balance sheet. How many shares outstanding? Okay. So it looks like they're slowing down the dilution. Definitely slowing down the dilution. Short interest is high. That's interesting. But yeah, it's just a messy chart. But they are back all the way down to almost all-time lows. I don't know. I might take another swing at Rumble. I had a little bit of Rumble in one of my many accounts, just a small position. I want to say somewhere around here. And then I took that swing high, and I sold somewhere around here. I can't remember. So my position in Rumble is very tiny, and not only is it very tiny, but it's pure profit, so it doesn't really bother me if the stock swings violently. But yeah, maybe I'll play Rumble, but I need to see some improvements. So just because there's too many stocks to go over, I'm just gonna, yeah, there's way too many stocks for me to go over. We're just gonna go over it just to save time. We're just gonna go over this one. So there's a big buyer here for Ralph Lauren. I might step in and buy a little bit more just because I don't have, I have a fractional share, that's all I have. But I'm gonna step in. Just to save time, I'm gonna quickly go over stocks that are in my portfolio. So Robinhood, obviously huge crash, but as I said, my personal price target for Robinhood is 100. I think we could see that this year. American Express, big money buyer right here. Like I showed you guys financially. Yeah, so I mean they're an all green company. Very few companies are all green, and American Express is one of them. It's a very special company with a very special business model. Nike has been a disappointment. Definitely a disappointing child, and the only thing keeping me in Nike, honestly, is my personal love for the brand, and I know that it's a special brand alongside the major insider buys. I don't know if I don't know if, whatever. I don't think it shows insider buying, but the CEO of Apple, Tim Cook, personally purchased Nike stock on the public markets, right? He spent his own money on Nike. And if you see any pictures of Tim Cook, he's always rocking like the Nike glasses. And the CEO of Nike, of course, he's dripped out all the time. He's got the new ACG black jacket. That's like $350. Insane. I was thinking about buying it, but I know I shouldn't spend $350. But anyways, moving on. LMND has come down quite a bit to retest the support zone, right? Same as the IPO price and whatnot. But I think we'll break this recent high, so that'll be a double up from here. And that's what I'm betting on, a double up for LMND. I already went over Shopify. We have Disney. Let's take a look. Moving averages are converging, which is what I like to see. We got big buyers stepping in here. I'm just going to kind of rapid fire this. Oh, also let's go over these fundamental metrics. So Disney, quite a bit of red. They've got a lot to work on, of course. Let's see. Sprouts is still green. It's still in all green, even after this crazy run up. That is nice. Norwegian Cruise Line recently dipped down back to $20 a share, which now brings the free cash flow yield to a green 5%. So that is interesting. Big activist investor stepping in. Hopefully they get them to stop diluting. But other than that, not too much to talk about. 200 weekly for Disney. QQQ. I guess I should have gone over this first. Basically a bunch of chop, but the 200 moving average is starting to possibly push this up. But there is still that crazy, scary gap down here. My personal REIT investment, big money buy zone here. Oh my goodness, REPX. Look at this wedge. This is just an insane wedge here. Look at this. Crazy consolidation. Moving averages are converging on the 3 monthly chart. That is a huge time frame. Huge time frame. And on the monthly, moving averages are tightening. And on the weekly, it did break above the 200. All right. So high dividend yield. Honest, man. Has been a disappointment lately. Not much to see. SOFI, popular stock. It's on the 21 monthly support. And Anthony Noto also stepped in to buy this, so it's another one that I'm keeping my eye on. Bullish divergence here, so we got bullish activity here, but the stock keeps going down, so it's a little divergence there. Pepsi, I mean, it's not much to talk about with Pepsi. 200 is all-time highs. Yeah, it had a breakout, come back down and retest. Hopefully it stays under 170 until I can get my covered call to expire, but we'll see. Google Palantir. Let's talk about Palantir real quick. Yeah, big money buy zone. So it looks like that buyer stepped in again, or somebody stepped in again to buy it off that zone, and they took it up. Let's look at Costco just very quickly. New bank. Not much to talk about. VFC has been consolidating forever. Wynn Resorts, another popular retail stock. Not much to mention. Okay, so with these cruise lines, one of the major reasons why I like these cruise lines is because, as you all know, in recent years, boomers have been winning, like a lot. Gold, silver, going up like crazy. Real estate has been holding up, even though the market's kind of frozen. But at least the values have been holding up. And, the Dow Jones has done pretty good. Maybe not recently, since the whole global situation. But, boomers in general have been doing good. And what do boomers usually do? They go on cruises, right? So it's one of my bets on boomers. Really good setup here for Norwegian Cruise Line. 3-month moving average crossover setup we've got going on here. It's been accumulated forever. Possible price target 40. Sprouts looks like it's bouncing off that 50 monthly. Possibly we'll see 100. So, 100 to fill this gap. But I believe I have a covered call at 90. So, honestly, if it hits 90, I'll probably just let it go, even though it's probably going to go to 100 too. But it is what it is. I'll take my money and then trade it and something else. But Chipotle just seems to not want to fill this gap here to 50, but possible price target. Cava has done very well. It's above the 200 daily moving average crossover, and it filled its gap. So Cava has done better than Chipotle. And a moving average crossover on the weekly. Let's talk about crypto. Ethereum, man, this is just a sad chart, but it's been consolidating forever. For 5 years, it's been consolidating. But yeah, sentiment is very low right now. It's basically done nothing for this past month. It's done nothing. Solana, same story. It's done nothing. Absolutely nothing. But yeah, what else is there to cover? Earnings next week. So some interesting earnings that are just right off the top of my head that I noticed. Casey's is interesting. It's a gas station, right? And with the global situation right now, it might be an interesting one to look at. Kohl's is interesting just because I used to play retail a little bit, retail stocks, right? If any of you guys remember those videos. Let's see what else sticks out to me. Franco-Nevada, maybe if you want to keep track of gold. Oracle, it's a big part of IGV, so that one's going to be interesting to look at. Oracle is highly levered, which is why I'm hesitant to buy it, but it is a very big tech company, a big part of IGV, but I might be, I'm okay just buying IGV, honestly. Let's see. Nothing sticking out to me here. Dix is another retail earnings coming up. Adobe, right? IGV, I believe it's a part of, but it's another software company beaten down. It's a stock on my watch list. If I play anything this week, maybe Casey's, just for, an energy play. Maybe Oracle, but most likely Adobe, if I even play anything. It's just, nothing is really sticking out to me this week. But anyways, the only way to support the channel right now is through my website. Desktop does not look as good as mobile. I don't like how big this is, but yeah, we finally have Bitcoin options. So I know somebody was asking about it before, but I do have a Bitcoin option now, even though I like Solana and ETH more. But yeah, I do have a Bitcoin wallet now. And as of right now, I'm still trying to hit my goal of $10. For some reason, nobody wants to help me reach my goal of $10 on Buy Me a Coffee. But yeah,